Good morning, students. I, Dr. V. M. Tedke, Sanjeevani College of Engineering, welcomes you all. Today, we are going to begin with unit number 2 in equity research. So, today we are going to learn the basics of technical analysis. So, at the end of the session, student will be able to understand technical analysis, assumptions in technical analysis, type of charts in technical analysis. Moving further, friends, what do you mean by technical analysis? Technical analysis is the study of past market action to try to gauge what the market might do in the future. So normally when you are trying to identify the future prices of shares, fundamentally there are certain techniques. One is fundamental analysis and second one is a technical analysis. Fundamental analysis is an attempt of identifying the intrinsic value of shares, and if it is undervalued we go on making the investments. If it is overvalued we are keeping ourselves away from the investments. Okay, whereas in technical analysis the basis is to find out the trend of price movements. Okay, so if prices are moving up we go on making a buy related decisions to get on the capitalization, and if prices are moving down then we are waiting for the prices to get settled to have the investment. So in technical analysis our attempt is to gauge the trend of the market, and based on that we goes on making the investment related decisions. Okay, so at its most basic, technical analysis is the study of prices and its movement. Okay, so in technical analysis is only interested in the price movements in the market. You might have seen several websites of BSE, NSE or Money Control or Zerodha. So thereby you would have seen some sort of those blue colored and red colored or even green colored those candlesticks and graphs and all that. So all those things are a part of technical analysis. Okay, moving further, assumptions in technical analysis. Friends, technical analysis is based on three things. Number one, market discounts everything. Number two, prices move in trends. And number three, history repeats itself. These are the three bases for laying down the foundation of technical analysis. Number one, market discounts everything, which means the share market and the prices of share market are dependent on anything and everything that is happening in the economy. Let us say if a new government would form, it would have impact on share market. If government collapses, it would have an impact on share market. If there is a heavy rainfall for this year, it would impact share market. If there is no rain this year, there is impact on share market. If a population of India has suddenly decreased because of some reasons, it would have impact on share market. If there is more important export happening in the country, it would impact share market. So there is anything and everything that is happening in and around the world is having sort of either direct or either indirect impact onto share market, and technical analysis believes the same, that everything that is happening is impacting onto share market. Number two, prices moves in trend. Technical analysis believes that the share prices of any company always moves in trends. Trends are basically a bullish trend and a bearish trend. Bullish trend is a trend whereby the prices of shares are moving upwards, that is prices are increasing, and the bearish trend is a kind of trend whereby the prices of shares are moving down or prices are going downstairs. Okay, so this is the second assumption, that every time when market is moving, market is always moving in trends. And lastly, History repeats itself. Technical analysis believes that if anything has happened in the past and if similar kind of symptoms are seen in future, then there is a possibility that the same thing would repeat which has happened sometimes in the past. So, technical analysis believes that history always used to repeat again and again. Okay, so these are the three basic assumptions in technical analysis. Moving further, let us try to see the types of charts in technical analysis. Basically, the various charts in technical analysis are candlestick chart, open high low close or bar chart, line chart, area chart or Heikin-Ashi chart. So we'll see them one by one. Candlestick chart. See the figure here, you will understand what do you mean by the candlestick chart. In this candlestick chart you can see there are some sort of red candles and green candles. So the red candle is the one whereby the prices of shares have, the closing price of share is lower than the opening price, and the green shows that the price of share has increased, that is opening price of share is lower than the closing price of shares. So this is a type of candlestick chart. In more details you can see the another version of candlestick chart whereby you can see I have written certain names, that is hanging man, falling window, then shooting star, hammer, bullish engulfing star, piercing pattern, dark cloud cover. So basically these are nothing but the chart patterns, single candlestick chart patterns which are normally being seen in the technical analysis. Okay, so this is a picture of a candlestick chart. Okay, whereas when a candle is shown with a green color, it indicates that closing price of shares is more than the opening price, that is today the price of shares has increased. And if the chart is shown, if the candlestick is shown with the red color, it means that price of a share has gone down, that is the opening price of shares was more than the closing price of a share for that particular day. At the same time you can also see there are few lines which are going either from upside or from downsides. They are nothing but the upper shadows and lower shadows which represent the day high and day low. For example, if there is a line above the candlestick, then it is a upper shadow, and upper shadow indicates the highest price which that particular share has reached to in that particular day. And the lower shadow, that is lower line, if you can see below the candlestick, then it represents the day low, that is the lowest price to which a share has reached in that particular share movement day. Okay, so this is a candlestick chart. Moving further, second part is a OHLC chart, which is also known as bar chart. The graph of candlestick and OHLC is basically similar. The only difference is that in order to show the opening price and closing price of a particular share, in candlestick we used to use a candle, whereby in OHLC we don't use candle, rather we use a left line, horizontal line, and a right horizontal line, where the left horizontal line indicates the opening price and right horizontal line indicates the closing price. Rest is same, that is if the bar is greenish, it means it is a bullish day, that is prices were moving up, and if it is red, then prices were bearish, that is they were decreasing. Everything else is same. Okay, so it is known as OHLC chart. O stands for opening price, H stands for high price, L stands for low price, and C stands for day closure price. Moving further, you can also have a line chart. Line chart is similar to candlestick chart. The only difference is in case of candlestick or OHLC graphs, you are using four stock prices, that is opening, high, low, and closer. Whereby in line charts, you are only using the closing prices of a particular share, and on the basis of the closing price of a share over a period of time, you can draw a chart called as line chart. In line chart, you basically intended to identify the support level and the resistance level. Support level is the level below which share prices do not normally go, and the resistance level is the level above which normally prices do not move in the normal circumstances. So this is a typical diagram of line chart. Okay, to make the graph more meaningful, there is another pattern called Heikin-Ashi chart. In Heikin-Ashi chart, You can see that rest of the things are common. The only difference is that to make this graph more meaningful, Heiken Ashi has used different strategy for drawing the candlestick. What is that strategy? Rather than taking direct opening price of a particular share for drawing a candlestick, they use this opening price to be opening of a previous bar plus closing of a previous bar divided by 2. For using the close figure, they are using open plus high plus low plus close divided by 4. For taking the high, they are taking highest of high, open or close, and for low, they are taking the lowest of low, open or close. So this is an attempt of Heiken Ashi chart to represent the candlestick by using some different methodology just to have the chart patterns to be more meaningful or more dynamic. You can see this is a pattern whereby Heiken Ashi chart has used. Okay, in this I have mentioned some of the green bars and some of the red bars, and you better knows what do you mean by this greens and reds. Okay, moving further, let us try to do a small exercise, and it would give you an idea about what are the basics of technical analysis, what is the assumptions of technical analysis, and what are the different types of candlestick chart patterns. Okay, so Google the several number of financial market websites and download the following chart patterns: candlestick pattern, OHLC chart, line chart pattern, area chart pattern, and Heiken Ashi chart pattern. Okay, I hope you will do this exercise and you have carefully watched the video. For any doubts and clarifications, you can contact me on the provided details. Thank you for watching the video and keep studied, keep motivating. Thank you. Have a nice time.